This is John Kingston from JR Trading Zone. I am here with yet another video, and the topic of this video is about directional and non-directional trading style. In my past videos, even though I have mentioned the word directional and non-directional, I have to make more clarity on directional and non-directional trading styles. Because I am here to teach you what is price action trading. In this price action trading, definitely we should know what is direction and what is non-directional strategies. Okay, first of all, what is non-directional? If you are a non-directional trader, you don't want to have a particular view on the market. You just assume that market will not go beyond this range or will not go below this range. This is your view on the market. Okay, if market is at 17,000, you are telling that market will not go beyond 18,000 on the upside, or it will not go beyond 16,000 on the downside within this particular expiry. We have weekly expiry, monthly expiry and long term expiry. We are going to sell the contracts. Okay, all the contracts are having expiry and you are taking a view that market won't go beyond that range or won't go below this range. This is called non-directional view. Okay, based on this view, you will be building non-directional strategies. There are more than 15 non-directional strategies, but for you to understand very easily, I will say you I am taking a simple strategy, the short triangle. If you are a trader, you may be aware of what is short triangle. You are going and selling a call option of 18,000 and selling a put option of 16,000. Both of them are contracts. If the market is traveling within this range, the premium which you have collected on the 18,000 call option and 16,000 put option is yours. This is called non-directional trading view. Okay, trading strategy or trading view. Based on this non-directional trading view, we can build more than 15 strategies. I am not going to tell you or teach you about the strategies, but I want to tell you what is non-directional. I think you are clear what is non-directional strategies. You don't have any view on the market, but you have only one view. Market will not go beyond this range or will not go below this range. Based on this assumption, you are going and selling a contract on the higher side and selling on a contract on the lower side, collecting the premium of both the strikes, and the premium is yours. This is called non-directional. Okay, then if you are a directional player or directional trader, you are having only one view about the market. Assume that market is standing at 17,000. Even though I have repeated in my previous videos, I want to make it very clear because this is learning video, education video. It might be quite lengthy, no problem for me. I want to make it clear. Okay, I want to make it crystal clear. That's all. If the market is at 17,000, you are having only one view. You are having only one direction. You are telling the market is surely going from 17,000 to 18,000 or 17,000 to 17,500, or on the downside 17,000 to 16,000 or 17,000 to 15,500 within this expiry. Based on this assumption, you are building directional strategies. Now, the second thing I want to tell is, in the highly volatile market, if the market is highly volatile, traders are forced to take more directional view on the market, even though if they are a non-directional trader. For this, I am making two examples. Two examples means I will take two traders. very famous traders. Everyone know these traders. I will prove how they have changed their view and changed their trading styles from their career at the present situation. They were non-directional, but they are taking a directional view on the market. First of all, we should know what was the market structure for the past quite years and what is the current market structure. For this, I have to make a small computer presentation, and after the presentation, I will come back. Now let's start the presentation. This is the Nifty chart of this week, okay, from Monday to Thursday. Monday, this is a 5-minute chart, you see, this is the 5-minute chart. If you want to change it into 15 minutes, you can go and change it into 15 minutes. You can get the 15 minutes chart, 30 minute, 1 hour, and so on. Okay, now as we are seeking positions for intraday, it's better to see in 5-minute chart. I was telling these traders were making money using non-directional strategies. That's what I want to show here. See here, Nifty was moving from here, this range, Monday morning, from nearly 17,902, and it hit a high of 18,175, 18,178, and then it returned back. Actually, this market is traveling inside a range. It's going like this, coming back, again going and hitting the high and coming back. This is the range of the market. See carefully. Okay. Now, Friday or Monday, if you are having the assumption that market will be traveling like this in sideways, like this in sideways within this range, I'll show you, within this range like this, according to your analysis, market is going to be sideways for the next 1 week. What these option sellers, non-directional option sellers used to do, I will tell you, they will build symbol triangles. I will show you how to build a symbol triangle. Okay, this I am taking Nifty chart for easiness. Bank Nifty chart is here. It is also traveling in a range. This is Bank Nifty chart. We can just take the example of Nifty chart. Okay, let it be Nifty chart. Okay, now you see, if you are a non-directional trader, here it has a high, it has made a high of 18,176 and low is 17,899. Okay, so if you are a non-directional trader, we have more than 15 non-directional strategies according to different market scenario depending on Indian VIX. India VIX means the volatility. Now actually the volatility is very less, and so the market is in a sideways range. Okay, if it is going in the sideways range, usually these non-directional option sellers go and sell a triangle. I will show you, there are more than 15 strategies. I am just revealing a simple strategy called short triangle. Okay, now your assumption as an option seller, non-directional option seller, that market will not go beyond this range, and on the downside it will not go beyond this range. You are assuming that the market will be traveling within this range till the next expiry. Okay, so based on this assumption, we are going to build a strategy called triangle, short triangle. I will show you how to make short triangle. I am not here to teach the strategies, but I want to say how non-directional players or non-directional traders were making easy money from the year 2016 to 2020. Now our range, we have to sell this call option, 18,200 call option on the upside and 17,800 put option on the downside, assuming that the market will be range bound in this range till the next expiry, that is till next Thursday. Okay, clear? Okay, now let's go to the options strategy builder to see how it works. Okay, now we are opening this site. This is option strategy builder. When we open, the site will be like this. Now you are selecting Nifty options. Next expiry of this options is 10th November. Okay, 10th November, next Thursday, all the strikes will expire, all the out of the money will expire, and the contracts will become zero. Out of the money contracts will become zero. Now we are going to choose two strikes. We are going to sell two strikes. 18,200 on the upside. 18,200. Come here. This is 18,200 for 88 rupees. This call option we are going to sell one lot. On the downside, wait. On the downside, we are going to sell 17,800. Okay, 17,800 put option on the downside. 17,800 put option for 50 rupees on the downside. Okay, we have sold two options. One call option 18,200 on the upside and 17,800 put option on the downside, assuming that the market will be range bound within this area. Let's see how this strategy works. See, this is short triangle. The margin money, premium money for this strategy is 1,15,000 rupees. You are collecting a premium of 6,905. If the market is staying between this range, that is, you have two break even, 17,662 on the downside and 18,388 on the upside. If the market is staying between this range, you are going to get this money 6,905, that is 5.98% returns, and the probability of making profit is 61.53. If you are a less risk taker, you can increase the range further. Okay, now you see this is risk is undefined. If the market moves like this, you may incur a great loss. If the market is going on the upside also, you will incur a great loss. Okay, in this volatile market, this strategy will not work for positional traders. Okay, how these option sellers were making money over years from 2016 to 2020, that's what I want to tell with this strategy. Now I am bringing you to the day chart. Okay, see, this is the day chart of Nifty. That means each and every candle is representing one day. Okay, now I will show you. Yes, it will be slightly small. Candles are slightly small, even though I will show you. See, this is from 2016 to 2020 period. 2016 to 2020 period. I will show you this range. This range is 2016 to 2020. Okay, you see, I will show one thing in this chart. From 2016 to 2020, the market is moving in this space. I will show you a close-up of this area. You see, this is that area, and we have to see closely. These are educational videos. It might be quite lengthy. You be patient and learn it very carefully. Okay, see, can you, all are day candles. These small candles are all day candles. Can you see any gap between the days? This is 2016 to 2020 period. Can you see any gaps? Rarely one or two gaps. See here, there is one or two small gaps. Here in this area, anywhere can you see any gaps? You see, market steadily moves 100 or 150 points, within 100 points. Market continuously, gradually moves within a small movement. It gives only a small movement. You see, carefully, see carefully in this chart. See, up to 2020. Okay, after 2020 I will show you. This was the area actually option sellers, that this non-directional option sellers made good returns. Now this is the corona crash area. Okay, corona crash area at this point. From here, this area is corona crash area. Then comes the recovery, and I will show you. See, this is the recovery area. Okay, now you should go to this chart. See how many gaps are created here. See, no days without a gap. See, all are gaps between each and every candle. This is day candle. One candle is representing one day, you know. See the gaps, see the gaps, see the gaps. In each and every area you can see a gap and volatility. See here, each and every day the market is gapping up 200, 300, 200, 300 points. You see here, you can see great gaps in this area. This is not the area for non-directional option sellers. It will be very hard for them to make money in this market. Here comes the importance of directional selling. We have to read the charts. Then comes the next pattern. You see here in this area, you can see another pattern. Just a minute. Highly volatile pattern. See, three types of pattern I am showing you. Three types of pattern I am showing you. See it clearly. Okay, 2016 to 2020, it is steadily going up but without gaps. There are no gaps, no violent moves. Market is making only a move of 100 or 150 points rarely. So a non-directional option seller making simple strangle, he is able to make excellent return, excellent and beautiful return. But here when you are coming in this area, here from the corona crash up to this area, an non-directional option seller can't make money. Here comes the importance of directional strategies. Okay, here comes the importance. Here we should be accurate how the market is working, what is the function of the market, what is support and resistance, where the market is likely to turn around. Each and everything we must be analyzing in this current market. This was the reason these non-directional traders, famous non-directional traders, became more directional. Actually, these people have changed their strategy in these years and they are successful by changing their strategies. So, I am telling the importance of price action trading in the current market. Okay, so even if you are a non-directional option seller, you must be able to know where the market is likely to take support and where the market is likely to take resistance. Okay, now you saw in this chart three types of market structure. One, the sideways very calm market structure without gaps. Gap is the main problem for an option seller, non-directional option seller. The gap is the biggest problem for a positional seller. If there is a big gap up or gap down, he may be supposed to lose more than 30 to 40% of his capital, even if he is not hedging. Even if he is hedging, he will lose more than 20 to 25% of his capital. Okay, this is the area, dangerous area for options, non-directional option sellers. That's it. Okay, always study a lot and work a lot. Here also you see in this area lot of gaps are being created, going up down daily, making gap downs, gap ups. See in this area, in this W shaped area also you are seeing lot of gap ups. Now I think friends you are clear why we should be more directional on the market. But the traders are actually famous traders are actually hard workers, and they come out of this situation by changing their strategies. When things goes tough, the tough goes going. There's a saying, that's what these traders follow in their life, and this is the success of the traders. In this presentation, I wanted to tell how the market structure was before years and what is the current market structure. Now you saw three market structure, a completely sideways market from 2016 to 2020. Then from 2020, it's going on high with big gap ups. These gap ups are actually very seriously will create a great problem for non-directional option sellers. Then you are coming to the W-shaped highly volatile market structure. So you are watching three types of market structure from my given example. Now at the present from 2016. Okay. Now I am going to talk about these two traders and I will prove you how they are more directional on the market. Okay. First, a Chennai based algo trader who is making straddles at each point of the market. When the market is moving, he shift on his algo and his system shift the algo and he build straddles at each point. He is very clear. He is very clear with his position. He posts all his positions in the Twitter handle. Okay. But now you see in this highly volatile market, he was forced to stop trade in some particular days. He himself came and told that for Monday he has made a special strategy and he is working on other strategies based on the current market structure. But once, if you are a follower, you can remember once he told that he never saw the chart for trading. Yes, for an option seller, he don't want to be a chartist. From 2016 to 2020, they just opened the option chain and sell the premium on the upside, sell the premium on the downside and eat the complete premium. Take the complete premium. This was what these non-directional option sellers were doing. This algo trader, he himself has told that I am building a new system for this current market scenario that is based on price action. Because price action means simply I am talking price action. You may think what is price action? Price action is simple. Based on support, resistance, previous day high, previous day low, swing highs and swing low, we can make some strategies. This is called price action. Price action is simple. Price action is based only on the price movements of the market. The next trader is an option seller. He is also a famous trader. I am a great fan of him, not only as a trader, as a person. He is a very nice person. And if you watch his videos or if you are a follower of him, he once stated that technical analysis is a bullshit. Why? They don't want to follow technical analysis actually. They don't want to see the charts. It was his famous statement, and those who are following price action and technical analysis were actually against his statement. Okay, but you see, before months, when the market became highly volatile after the corona period, he came with a new statement and told that I didn't mention that technical analysis is a bullshit. I told that we have to follow technical analysis along with other parameters, other economical conditions. He came with a clarification. Nowadays, if you are a follower of him, you know in each and every video he is showing his screen and talking about support, resistance, previous day high, previous day low, swing high, swing low. This is price action. From that area of seeing no charts and blaming the technical analysis, after years, in this current market scenario, they are forced to follow price action trading or technical analysis. Okay, this is what I wanted to. They themselves change. This is their success strategy. What is the success strategy of the professionals? They change according to the market structure. They don't stick on to one strategy. So in this video, I wanted to say the importance of directional trading. Now I think you got an idea what is direction. Directional trading is simple. We are just taking positions based on support, resistance, previous day high, previous day low, swing high and swing low. Market makes a lot of swing high and swing low based on this demand zone and supply zone. Based on this, we take positions. This is called price action. Okay, the price action is simple trading style. Then one more thing I want to make clear in the video is when we tell technical analysis always misinterpreted. People always think technical analysis means adding some indicators to their chart. They will go and add some famous indicators, RSI, MACD, stochastic, Bollinger Bands, some moving average, ADX, lot of indicators are there. Adding some indicators to your chart and trading with the help of indicators is not technical analysis according to me. I think price action is technical. Price is everything. Price movements and the market is determined, the movements are determined by sellers and buyers. If buyers are taking over upper hand, the market will move up. If the sellers are taking upper hand, the market will move down. We should be able to watch them from outside. We should know who is going to succeed. If the bull or bear. If the bull is succeeding, we should go with the bull. If the bear is succeeding, we should go with the bear. This is what a trader should do. Actually, we should be watching from, we are in a gallery and we should be watching from outside. What are these buyers and sellers doing? Who is going to dominate the market? If buyers are dominating, go with the buyers. If the sellers are dominating, go with the sellers. This is what we should do. This is what a trader should do. If you are a price action trader, you know what is going to happen in the market. You can read from the charts. You can read, is it a breakout pattern? It is, if the, from this level, is the market going to move up? Is the market going to move down? You can clearly understand it if you are a price action trader and a chartist. This is what I am saying. Price action is simple. Trading is simple. Trading is complicated, made complicated by these traders. Lot of indicators, lot of unwanted information. Guys, I will say you one example. If you are going to a railway station, you are asking for a ticket from your particular railway station to Bombay or Delhi. What the person in the railway department should do, he should give the information of that particular train. Instead, if he is giving the entire information of all the trains which are coming to the station and going to other stations, will you be confused or not? Can you remember anything? You can't remember anything. You can't concentrate on anything. You can't get your the time of the real train which you wanted to go also. This is what is happening in the market. It is over polluted actually. Each and every guys YouTubers are coming and talking about indicators, that indicator, this indicator. But are they following that indicator? No. Another famous trader who is having millions of followers, I think, if you go to his class, YouTube classes, first of all, he is coming and making an introduction about what is stock market. Then he will start talking about indicators. Indicators means RSI, Bollinger Bands, MACD, stochastic, moving averages, CPR, and all the indicators, making one video for each and every indicator. But is he following that trading style? No. This is the teaching style. Actually, they teach what is wanted and what is not wanted. So a trader get confused. When they come into the market, they come with some money. They go belong with these indicators, follow some traders, take some positions. When they are starting to learn and they lost their entire capital. I will come with a separate video why I don't follow indicator, and the only indicator which I am following is CPR. I want to take a series of videos about CPR and how we can explore CPR, and I think you got some valuable information from this video. If you think really this video was valuable to you, you can press the like button, support my channel and subscribe my channel. You can share this video to all the trading community members and they may get some valuable information from my video. This is John Kingston signing off from JR Trading Zone.